Rosehart Show. We're live again for another week, another installment. And today we're talking about real estate. As we always do every week, we talk about stock market, real estate, anything to help you grow your money. And today I want to talk about the real estate market because it was the hot trend in 2020, 2021. Everyone was about real estate. Every influencer was jumping on, bragging about Airbnb, bragging about their newest flip, their speculative new build. Everyone was investing in real estate. Even people who didn't have a specialty in real estate were investing in real estate. And it became so hot and so inflated. And then everything stopped when the music stopped playing. People were left with their pants down as the tide went out. So today I want to talk about how real estate is dead in some ways. And for the good operators and the people who follow this channel, who follow other people in the space who are good underwriters of deals. By that I mean someone who knows how to analyze a good deal, knows how to operate a business. If you operate your real estate business like a business, you can be very, very profitable throughout this. So by the way, if you have any questions, throw them down below. We do this live stream every week, 7 to 8 p.m. If you're new to this channel and new to the stream. Just had a beautiful bath. Gotta say, baths are underrated for dudes. Like a nice hot bath, nothing better than that. So just coming out of a nice hot steam bath, and it was fantastic. So I'm feeling really relaxed, feeling really good. And I'm sitting down to start the stream and I'm thinking, what have I been talking about all week on social media? And what am I seeing on the feeds and where are people going wrong? Right now, there are too many people who are still speculating in real estate, who are not operating it like a business. I've noticed a lot of different coaching programs that are existing in the space. And, there's a lot of stuff in the US right now that I see sponsor advertisements all the time for real estate because, again, I'm in real estate. I think Instagram and Facebook target me. But I was seeing an ad the other day with some kid, and they were like an 18-year-old kid who done like one deal ever. I went and looked at their profile and saw they were like advertising to like $500,000 invested in real estate. And I was like, geez, that's one property. You're bragging about a property. It's like, it sounds great when you see these big numbers, right? Like 500,000, $1 million, 10 million. You might even see like, this also goes for Airbnb as well. Airbnb re-rental, Airbnb property management. I see property management companies do this all the time. I seen a property management company advertise that they collected like $10 million in rent. And when you net that down, they make like nothing on that. You could be in a loss position collecting $10 million a year in rent. Same for Airbnb. You could be an Airbnb arbitrager. And I did a post on this last week and I reposted it on my stories again. And there was a lot of controversy. There was the people who were in the camp of like, Airbnb's amazing. It's great. Why you're shitting on it. And then most of those people are trying to raise capital for their Airbnbs. So I get their inherent bias, or they're trying to sell courses for it, or they've bought a course for it. And then they have a cognitive bias where effectively you get cognitive dissonance, which is the psychological term for your brain can't process new information that goes against what you've already subscribed to because you feel like an idiot if you did. It's like if you bought a course and you thought that it was the best thing ever, and then you got conflicting information that said, hey, this maybe isn't the best thing for you or the best thing ever since sliced bread. And then all of a sudden you get cognitive dissonance because you're like, whoa, this doesn't line up to the current fact pattern that I've set up in my mental schemas. And all of a sudden there's uncomfort there. And so my hope today with today's title and today's stream is to give a little bit of uncomfort to those people who are watching today and to those people who will find this stream. And I want to do that on purpose because I want to get you thinking. I want to activate the, critical thinking hat or the critical thinking lens and put it on and look at these business opportunities with a, critical lens. So how do we look through these opportunities in order to, avoid the pitfalls and some of the struggles that people are actually experiencing going through this right now? Hey, Merry Christmas. We're a little early for Christmas. Whoa. My daughter's still in school until Friday. So, we're going right up to the end. It's a business day here in Canada up until Friday. Friday at 5 is like business hours. So you guys know, even if it was Christmas Day, I'd be online. If a Wednesday falls on a holiday, I'm here 5 years in a row, every Wednesday without fail. And that's one of the things that you need to succeed in this business. Just in business in general and in life is like, just show up. You don't feel well, show up. You don't want to do it, just show up. Maybe you don't play your best game. Maybe you don't put your best performance out. But you show up every day, you put an effort in, and that compounds over a lifetime to insane amounts of success. So that's been one thing I've always subscribed to, and it's fantastic advice, I think, if you're looking to succeed in this world and in any business endeavor. But anyway, let's break down some numbers. So with the Airbnb model, I wanted to harp on this because everyone's about Airbnb. And typically when everyone becomes about something, it's right about to bust and crash, which is exactly what we're seeing in this space. Something like 3/4 of Airbnb hosts right now are like 50% vacant. Many have empty calendars right now. I'm talking large, massive companies with hundreds of listings sitting at below the break-even points. So they're starting to lose money when you factor in all of the fixed expenses and all the extra expenses. So I'll give you an example of how this could break down. So imagine you had $1 million, just because it's easy, $1 million in Airbnb revenue, and you'd post that on your social media, you'd share that with your following. That sounds great. Like, wow, this guy's doing $1 million in Airbnb bookings. He's a major player. It's like, really? $1 million in Airbnb bookings. When you break that down, if you're a property manager, you're managing that for someone else, your net on that's 15-20% as your fee. So right off the bat, 15 to 20% is yours, 150 to 200 grand. That's top line. That's before your software costs, which are another 4% of the gross in total. So that's another $40,000 gone. There's HST on that. Any bookings, there's harmonized sales tax in Ontario. So you have to, on $1 million, you're going to have like, I don't know, 6 figures, well into $100,000 in HST payable that you have to pay. You didn't probably charge your guests. It was an all-inclusive price. And now you have to go and remit that HST to the government. So right off the bat, your million becomes 800 something. And then if you're a property manager, you're getting like 100 grand of that. So it sounds great, but when you're managing other people's properties or you're renting as an example, your margin's pretty thin. You might be renting a 1-bedroom for a lot of the time, $1,800 a month. And they're bragging, oh, I'm getting, $3,000, $4,000 a month. So I'm making, $2,000 a month profit. No. That's gross profit, not net profit. In the arbitrage model, say you're getting 3,000 a month in revenue. And that's, some months you'll have 2,000. Some months you'll have 4,000, right? I'm just averaging it. High season, you'll have more. And they'll always, people will always pick their best months and, make it sound like they're doing better than they are. And that's just the nature of things, right? When you put your critical hat on and you think, if I get into this business, that's what I'm trying to help you guys determine is like, should you get into this business potentially? And the answer is maybe. Maybe. I think that when you look under the covers, what you see is that the top 10% of operators are doing very well still. The bottom half are all losing money. So half of the operators are losing money, but then the top half are doing, somewhere in between. And so the way I see it is like one property on Airbnb as an arbitrage is bringing you a few $100 a month. That's not going to change your life in any way. I mean, at least to me. So I see you need hundreds of properties for it to really start making sense, get the economies of scale. Once you look at the fixed costs like salaries, cleaning you can expense a lot of it, but there's furniture capitalization costs and depreciation, all of these things that aren't considered into most people's numbers when they run their arbitrage model. So I want you to put your critical thinking on with that. And then flipping, same thing. A lot of people don't factor in their realtor costs, their closing costs. Closing costs can often include, like on the buy side, your appraisal, your lender setup fees, could be lender fees, could be, again, also state taxes sometimes when you're setting up mortgages. Not in Ontario, but in some other places, I know in the US, they charge a fee to set up a mortgage. A lot of different costs that add up that you won't necessarily think of when you see someone say, hey, sold a property for 200, bought it for 100. You're like, wow, the person made 100 grand. No. Oftentimes, their margins are much smaller than that. They're making 10, 20, 30 grand on that net, which is still great, better than losing money. There are lots of operators right now who are losing money too, who bought at the start of this year for 200 grand at the top of the market here in Ontario. And we've had a 30% correction in my market here in Ontario, Canada. And that results in, if you bought a property for 200 grand, it's worth 159 maybe. Then you got realtor costs, so it's worth 150, 140. If you spend 50,000 on renovations, you bought it for 100, it might sound great, but you actually lost money on the sale. And that's very common right now. We're seeing a lot of that stuff happening. So real estate right now is not necessarily dead. I did that as a bit of a clickbait because I want to get people's attention. I want to evoke that emotion, but it's not alive in the way that it was before. Nowadays you really have to, really run those numbers. You have to make sure that, I like to look for deals that are 60 cents on the dollar because I can be sure that I can renovate for 20 cents and then have a 20% margin there for profit. And even if you're buying and holding, regardless, you should be focused on running your numbers very tightly, making sure that if you have to hold this flip, is it cash flow positive? If you have to hold it for 3 years, can you hold it? A lot of people are buying single family properties that don't make any sense, that don't cash flow. Like here in Toronto, there's like $1 million houses. People are paying $1 million for a single family house or a condo that rents for like $2 grand a month. And it's like your payments are $9,000 a month. You're gonna lose $7 grand a month? They're like, oh, well, no, I was actually planning it was a new build. I was gonna like sell it in a year. And it's like, well, what happens when prices are lower? Did you think through that scenario? Oh, well, I'll just rent it out. Well, how does that play out? Let's think through renting it out. Can you afford to put $7,000 a month into that property? Same goes for arbitragers. A lot of people are like, oh, I can't afford to buy a property, so I'm just going to rent a property and put it on Airbnb. Now, it can be a great model. I like it sometimes. But most properties aren't the right location, they aren't the right type of property, or your cost base is too high for it to make any sense. Remember, furniture costs and setup costs and design costs are significant. And a lot of these people getting into this space are raising capital at, right now you have to pay 18, 20% to raise, money, especially for when your secured, your underlying security is prepaid rent, setup expense labor, design labor, and furniture. Furniture depreciates on a 2-year schedule, typically. It means it's garbage in 2 years. So your underlying asset is nothing. They can cancel your lease like that, gone. Your prepaid rent, gone. Anything you spend to labor to set it up, gone. You got some furniture that's maybe worth 1/4 of what you spent. Half your setup cost was labor, design, prepaid rents. Like, it takes time. You have to pay the rent while it's being set up, right? If you can negotiate, and some of the good arbitragers can negotiate free rent to set up, and they can be in situations where they're making a little bit of cash flow. In the low season, they might be able to put some money into the business. In the high season, they're profitable. I'm not shitting on the business entirely. I'm just saying, just be cognizant of the fact that, like, we're in a deep recession and you might not make significant returns in this business. 3/4 of people are going to get into this and not be great operators. After a year of running an Airbnb or 10 Airbnbs, they'll see it's very difficult to operate it at scale and stay a top 10, 20% listing, maintain that super host, maintain those great reviews as you grow. And you need to grow and get to scale as a property management company or as an Airbnb arbitrager for it to make any sense. Otherwise, you're making a couple $1,000s a month. Who cares? I mean, I guess to me, I wouldn't want to run a business for a couple grand a month. I mean, it just doesn't make sense. I'd much rather chase opportunities like, $1 million in Airbnb revenue boils down to one flip. It's like, I don't know. I see these small timers and they got like a 500,000 in Airbnb revenue and they're posting about how great it is and they have like 8 Airbnbs and I'm like, they're netting less than I make on one flip in a year. It's like, how is that impressive? Why are people paying for coaching? Why are people, like, not necessarily coaching? Why are people just selling courses? But like, that's where the margins are. Real estate is dead when, inexperienced people who haven't been in the business for a long time, like the solid operators who've been in the business 5-10 years, they know what's going on. If you've been through several cycles, you stood the test of time, that's someone who you'd want to look at for, if I was going to, get into the space of flipping or any of the real estate sectors, because there's like flipping, there's the BRRRR, the buy and hold type investors, there's the new construction stuff, there's the Airbnb space, there's the arbitrage space, property management, leasing. Some people get into the real estate wholesaling space where they're assigning contracts. Anyway, so yes, there is less margin than a lot of people, pretend that there is. And so I like that, I really like that right now there are so many opportunities out there in real estate. Especially in the next year, we're going to see so many opportunities where these people who weren't great operators, who, are losing their shirt right now, they pretend that they aren't on social media, right? And then we can get in there and we can buy those properties at pennies on the dollar. And so next year, if you can gear up and you can build your systems, you can get, things lined up and ducks in a row, it can make a lot of sense to blow up. This is going to be a really great opportunity to explode into the next bull market. And so I see a lot of opportunity everywhere. And this is a great time not to go so heavy, but to continue nibbling and buy the dip. So even with properties, I treat my business in the same way. I continue operating, but much more conservatively. So I'm keeping larger cash reserves. I'm preparing for that opportunity to dive in and to buy more on the dip. So anyway, I'm just going to go to live in Q&A for a sec here. Let's hit some Q&As. Tristan, how you doing? Best to you and your family as well. Corey says, hey, Mike, what do you think of the new anti-flipping tax? So Corey, I have an active business where if I'm doing flips, I do it inside of my active business where I assign properties and I flip properties. And inside of that business, I'm taxed at 12.9% here in Ontario. So if I do a flip, it's considered business income. And so on $100,000 of net profit, I'd pay about $12,000, $13,000 in costs. So if you're going to flip, the new rules apply to personal individuals. So on your personal tax return, you'd typically want to sell a property. And so basically, I'll just clarify the new rules for anyone that doesn't know. Here in Ontario, there's now a new rule where if you own a property, if you sell a property, you've owned it for less than 366 days, it's considered automatically considered a flip. And even if you own it less than 2 years, they can consider it a flip, but under 1 year, for sure, it's a flip now. So that's basically the understanding. They take that income, and my understanding of it is they take the income and they treat it as business income, which is taxed at basically your marginal tax rate. So depending on where you are on the spectrum, if you have like 100 grand in income and you're at a higher bracket, then you're going to pay 40% tax on all of that flip income. Make 100 grand, 40 grand of it's gone. So if you're going to flip, do it inside of a corporation. 100%. Make an active business. Hire staff. Run all your, like I run an active business flipping. And so for me, that's what I do. It's my profession. So they already, no matter what I do, I see it as a business. It sucks. It sounds great that I'm getting 12.9% inside my corporation. As soon as I take it out of my corporation, I'm taxed. I get a credit back for what I've already paid in tax, my dividend myself. But the dividend tax rates are almost 40% at my level. And if I take it out as a salary, I get up to 50% tax anyway. So when you take it out of your corp, you get taxed anyway. You're stuck paying tax in Ontario, no matter how you look at it. But we prefer, as investors, capital gains tax treatment. Capital gains tax treatment means half of the gain is tax-free. So if it was a rental property for 2 years and you sold it, you made 100 grand, then $50,000 of it is automatically tax-free. The other 50% is taxed to your marginal tax bracket, the same as business income would have been on the whole profit of the flip. So from a tax perspective, here's the truth. Here's what I think the solution is, because it's only getting worse. Tax rates are only increasing. There's a whole mentality around socialism and around spreading the wealth and taking it from the top and giving it to basically to the bureaucrat to blow and mismanage. If you've seen how the budget's been managed, about half your taxes go to nothing. They go to just wasted initiatives like that stupid, what was it called? Arrive Canada apps, the stupidest thing ever. They spent like $50 million to build an app that could have been made in a weekend with some Red Bull and some decent coders. Again, just an example of like a park bench at a local park put in by the municipality. It cost you 100 grand. And it's like a private contractor could build a bench for like 4 grand. It's like, why does it cost 5 times as much? Because they have 6 people and 4 of them are standing around and they're paid from 7 to 2 and they're unionized workers who don't work very hard. And they stretch out a 2 days work into 2 weeks work, right? There's a lot of paperwork, a lot of, safety precautions. And when I say safety precautions, they spend half the day in the office talking about how to be more safe. And then they go to site and one person works and everyone else watches. Taxes are going to Ukraine as well. That's a whole other debate, but I believe we should help ourselves first, put on our own life jackets and our own preservers before we help others. I also just think that, I don't want to get into the politics of it, but NATO definitely has a hand to play in encouraging what has been happening there. So I'm not going to get into that right now. That's a topic for another stream, but here's the solution I have. When you allow people in the private sector to give freely, more gets given, more gets to the better causes, less loss to bureaucracy, less loss to waste and inefficiency. So I believe you give individuals the chance to donate their time like I do every week on this Wednesday show. Imagine if I was like legislated and required to donate time or money, right? Like I can do so much more when I give, and all of what I give goes directly to helping people. So I'll often, like pretty much every Christmas when I'm going to the grocery store, and I don't go to the grocery store as much as I used to, but I'll be out and I'll see someone who's, those things hungry. And I'm like, let's go get groceries. Let's go fill the cart. Spend $300-400 on some groceries. Like that's how I can give back directly. Give that $300 to a charity and like $50 of it goes to some cereal to someone in the slums. And it's like, that isn't solving any problems. They're giving them sugary garbage that doesn't help them. And most of it goes to administrative to collect the money. It's like, anyway, I don't want to get into how corrupt a lot of charities are. A lot of the percentage of what you give to charities is, the worst charity in the whole world is the government because they take from you and then they waste it all. Anyway, my solution, I can't change the system, but I can learn to play within it. Or you can just leave the system entirely. I'll give you a scenario. You go set up a home base in the Bahamas. You have to be there 90 days a year. And in the Bahamas, you are not personally required to pay any tax. You don't even have to file a tax return. There is no tax time in the Bahamas. You report nothing. You don't even complete a return. No tax at all. No income tax, no property tax in the island of Freeport. As in, you have a property, you pay no tax to the government. It's your land. You don't pay any tax for your house. $1 million house, no property tax. Zero. Oh, you made $1 million in income? Zero tax. Capital gains tax? No, there is no capital gains tax. You live there 90 days a year. You have to reside there for 90 days a year and set up a residence. And then remember that Bahamas is 60 miles, 20-minute flight from Miami, West Palm Beach. And there's ferries that go back and forth, 2-hour ferry. So you can just take a boat, go back and forth. You get fly a plane. The plane ride's like $50. It's a 20-minute flight, so it takes less time than commuting across the city. And you could, in theory, spend your weekends in the Bahamas, live Monday to Friday or Monday to Thursday, and work in West Palm Beach, Miami, whatever, set up a corporation there, set up a corporation in the Bahamas, personally reside in the Bahamas, file no tax returns, report nothing, pay no tax. Your corporation in the Bahamas pays a small amount of tax on top line revenue, and you bill out everything from your corporations back to your corporation in the Bahamas. IP is owned by the Bahamas Corp. Licensing fee. If you have $200,000 in profit in your US Corp, you bleed it out to your Bahamas Corp. So you have a Corp that's bringing $1 million in revenue. You've got $1 million in expenses now. You have zero in net income. You're operating in Canada, in the US with businesses, and you're bleeding out the profit and paying it out to friends, companies, or other companies overseas that you set up in Dubai, Bahamas, etc., so forth, and you bleed it out and you can still operate. Anyway, so you could in theory live in Florida, and then you can go back to Canada 5 months a year if you love the summers in Canada, and spend 5 months in Canada, 4 months in, or I guess the 7 months in Florida/Bahamas, but weekends in Bahamas, during the week in Florida. And then during hurricane season, you get out of there, which is the summertime, and you go and you enjoy Canada, the most beautiful place in the whole world. And you pay no tax at all. What kind of setup is that? That's sick. I'm sorry, but that's a solution to a problem. Over my lifetime, I get to live my best life. And if I can align that tax strategy to a lifestyle that I actually enjoy, which, like, I hate the winters in Canada. Hate them. I almost want to be 6 months a year. I don't want to be in Canada. But if I could just go like 6.5 months a year, if I stay an extra 2 weeks, all of a sudden I pay no tax. Yeah, I'll stay 2 weeks in paradise to pay no tax. Yeah, I'll stay out of Canada. I'll just stay out of Canada 6 months or less. I won't stay in Canada too long, and it can make a lot of sense. So that's my thoughts when it comes to tax. You can play within the rules here, and it's great. There are some really great vehicles. As an example, in Canada, your primary residence is tax-free, so that's cool. For me, that's been significant. I've made millions tax-free on my primary residences over my life. So it's a great strategy. Your capital gains tax-free on your primary residence. So if you buy a house for $1 million, sell it for $3 million, you make a $2 million profit, all tax-free. So that's, you should always have a primary residence. The government is incentivizing us to all be homeowners in Canada. They want us to own property here. It's just such an amazing, it is the #1 tax-advantaged program that exists, bar none, in Canada, if you use it properly. And if you use it the way I do, where you know how to buy properties under market value, and you know how to add value to properties over time through things like staging and landscaping, even small things can make huge differences. It can be significant. And if you're a realtor, you can sell your own property and your expenses are really low because you can't write off any expenses against your primary residence anyway. If you want to be capital gains tax-free. So keep the expenses super low and maximize that upside, right? Anyway, back to the Q&A for a sec. I thought I'd just touch on that little rant. Thank you for bringing up the tax, the new anti-tax flipping tax that affects personal individuals. It doesn't really affect businesses at all. But anyway, just in general, capital gains treatment is preferred, even inside of a corporation, because you get taxed credits for the capital gains treatment is just it's just all around better inside of a corporation as an individual. Flippers get taxed worse. So it is better to hold a property for longer if it can make sense. So general real estate investing, if real estate is dead, you definitely want to hold that until real estate's not dead. Hold that property into next year till we have a bull market, and then dispose of it then. And the government's going to give you preferential tax treatment. Because remember, capital gains tax is half the tax. So a rental property held for 2-3 years, even if it was a flip and you decide to hold it for an extra year, the tax advantage of holding it that extra year can make up for any even negative cash flow in some situations. So it can definitely make sense to hold a property, but every situation is different. And you got to look at your return on equity and your return on capital. And when you factor in the tax shield, does it make sense or does it not make sense? And each person's situation is going to be slightly different. So maybe someone's got a really cheap mortgage and it can make a lot of sense to hold. Maybe someone else has a really expensive private mortgage, and holding that flip doesn't make sense unless you can refinance it, and maybe they can't. So maybe there's a reason why you got to sell. And if you're one of the people watching right now who bought a property in the last year, you're probably in a loss position right now. It might make sense to sell that in less than a year, because guess what? Now your capital loss, because real estate's dead right now, everyone's in a loss position. Now your capital loss is counted 100%. Whereas if you hold that property, you sell it and you have it's a capital loss, then it's treated as half tax free. So you don't get the gain of that loss. So instead of if you had a $100,000 loss in a property, lock it in. If you got a stock loss right now, harvest that loss, put it against your day job salary, and have another year of tax-free, maybe even in next year, and then rebuy another asset or buy that same asset again after a 30-day holding period. If you sell a stock, you have to wait at least 30 days to get back into that same position. I use option contracts to then stay in the position without staying in the position. So you can sell the equity and then you could sell puts 6 months from now or buy calls and effectively, or create a straddle or something, and effectively still hold that position without holding that position and now create and harvest a loss for the tax man. So this year's a great year. I'm harvesting like $1.5 million in losses between crypto and stocks and everything that's down. I'm harvesting that. And now next year I get a tax-free year. Sweet. Like I get to make another $1.5 million, make back all that money tax-free. So that's great. You know, it gives me another year before I have to leave the Bahamas. Or makes my exit return from Canada even cheaper. It'd be actually a great time to go. This is one of the best times to structure things where you can get out of Canada and file that exit return and reset up. Like you still have a corporation in Canada, you can still operate in Canada, have properties in Canada, you just move them all your personal holdings into a corporation. Your corporation still lives and breathes. You still take business trips to Canada, whatever, to run it, but you just personally aren't taxed anymore. You can bleed that capital out into, you know, a Cayman's Corp or a Bahamas Corp or a Corp in Singapore or Dubai. Doesn't have to be Bahamas, but from a personal standpoint, Bahamas is, like, as far as I've been able to find, the best, just because it's so close to Miami. And so to get that 90-day requirement where you don't have to file any tax return at all. Dubai used to be pretty cool, but then now they come up with some new rules where they're starting to track things and they're starting to be a little more, they're not looking as nicely upon those individuals who are sheltering. And so Dubai is not as sexy as it was a year ago with the new rules coming into place there. But as far as like a personal residence, Cayman sucks. You gotta spend 6 months a year there. Puerto Rico is great because you can hold U.S. stocks and collect U.S. capital gains, U.S. dividends, and you get tax free for 20 years. If you're a U.S. citizen, you go to Puerto Rico. There's some cool stuff there. But again, you're stuck living in Puerto Rico, right? And Dubai is expensive. Good point. So that Sean just put up there. Bahamas is cheap. I can literally buy a 2,000 square foot concrete poured bungalow with no property taxes for $200,000 US. Beautiful properties. Beautiful properties. There was a mansion for like $450,000 if you know where to look in Freeport as an example. Freeport's one of the closest islands. The Grand Bahamas they are like 60 miles from West Palm Beach. It's one of the closer islands. I chose that one because they have a preferred import-export. They're basically an import-export island, and they have some preferred stuff after the hurricanes hit a few years ago where you can import stuff for nothing. You can bring tile from like the US in, super cheap, no duty. And so there's some really cool stuff there with vehicles. And anyway, it seemed like an island that needed a lot of investment. Beautiful beaches, where they filmed Pirates of the Caribbean. So anyway, that's where I'll end up. I have reserves, or I guess reservations is the word I'm looking for. I have reservations because I have 3 kids and I have family here, and it's tough to go. I think it'll be tough on us, but we'll still spend our summers in Canada. We already spent our winters. I'm going to Florida in a week. Less than a week, I'll be in Florida, and I'll be there for 4 months. That's my normal life. So why don't I just spend a couple of months extra, break up some of my time, spend a week in the Bahamas here and there, get my 90 days, enjoy the good life, between Florida and the Bahamas, you can really live a great life. There are some really cool communities in Florida, actually, 60 miles away, where they have, there's a condo community of 100 beautiful houses, $500,000 a house, and they share an airport in their condo fee. And so everyone just has a plane and they drive their hangar to their house. They have a big garage inside of their house. Brian Balmer lived in one of those communities, and you can just you get your own private pilot's license. 30 minutes, you fly back and forth. It's like commuting across the city over to the Bahamas, and boom, you're in a tax-free international hub of capital. It's like, I think the Bahamas is the second wealthiest. It might be the wealthiest per capita. Most corporations per capita. Anyway, it's a financial hub. I forget the stat on it, but it's very wealthy. A lot of wealth is stored in the Bahamas because of the proximity to the U.S., right? Whereas Dubai, you got to go far in a plane for a day to get there. Whereas I can go 20 minutes, boom, I'm back and forth. In the same day, I go back and forth. Where you don't get that luxury anywhere else and have that kind of lifestyle. So for me, that's why right now it's a top contender. Going back to the Bahamas again this year. We're going down to Costa Rica. I think my long-term plan is to pick up a Costa Rican passport as well. Just have another passport, have some more flexibility. A Canadian passport's great, but if something ever happens between the West and the East, could happen. Tensions rise. I want to go down to South America, and the nicest, most beautiful country in all of South America, I think. Having been to Brazil, Brazil is beautiful. I love Brazil, but Costa Rica it's got a great freshwater setup, top 20 healthcare in the world. Um, just a beautiful, clean place that has some great tax rules, and they don't tax any income that you earn outside of the country. So you could be a billionaire and pay no tax in Costa Rica, in theory, if you didn't do anything in Costa Rica. Just another place to have a passport, another place to be safe and go to. And so it's been on my bucket list. That could change over time, but that's kind of where I think I'll have my second passport. And then the Bahamas would just be like a residency card. Every 10 years, you renew the residency card. You don't get a Bahamas passport. You get all the tax treatment, and you're good to go. It's like you invest $500,000 and you're good to go. Um, yeah. I don't know everything. This has just been what I've uncovered so far. Alex says, how would you turn 500,000 in capital into 20,000 a month cash flow in 12 months? Merry Christmas. So Alex says, 20,000 a month. So it's a pretty generous, 20,000 a month is pretty generous. That's a lot of money. It's $240,000 a year. It's almost a 50% return. That's difficult to achieve. You're not going to do it passively. So you're going to have to put time in. You're going to have to put energy and effort in to get that kind of return. There's going to be a level of risk too with that type of return. I could tell you do something like, start flipping contracts, start flipping properties, doing Airbnb arbitrage, all in the real estate space relatively easily to grow that capital. But it's going to take a lot of work. It's not going to be, passive or easy. But take $500,000 and make 20 grand a month. In this market, you're just not going to get it private lending. So you need more capital. 20 grand a month is a significant amount of cash flow. Like if you had $2 million, I'd be like, yeah, no problem. Like we go passively private land, throw it on some properties in a first mortgage, safe loan to value, almost no risk at all. You could take $2 million and make 20 grand a month. So I think probably the best way to get there is to build a business around something that you're passionate about. I like real estate only because when you build a business around real estate, it's really hard to lose. Your underlying asset holds value very, very well if you operate well and effectively in the space that you're, niching down into. So let's say you're niching down to like duplexes. If you know your duplex game or your multifamilies, if you know your multifamily game, you can negotiate better financing where you can get into a deal for 10, 20% down sometimes and create great cash flow for yourself. I'm looking at a building right now in Florida, not far from Miami and West Palm Beach. And it's an example of a building where we're trying to get vendor financing. The vendor finances 80% loan to value at 2 to 3% interest. So if that deal comes together, it's a large multifamily building near the beach. If that deal, and I'm working on it aggressively, if that deal comes together, that would cash flow, if I put it on Airbnb, if I didn't put it on Airbnb, $10,000, $20,000 a month. If I put it on Airbnb, it could be $40,000 a month as an example. And a deal like that, though it wouldn't generate 500,000, wouldn't take you to $20,000 a month. If you brought a partner on, if you find someone else who had another $500,000, your $1 million, you could buy a building like that. And so maybe you go on with a partner, and together you guys are able to throw in an Airbnb. And if you put the effort in, you stage those units really nice, and you get in there and you renovate everything nice, and you put beautiful painted decals and things to really like vibe up the Airbnb. You make the pool area super nice by getting out there and like putting tiki bars, and you create a booking, a nice little calendar, a nice check-in book that has all the local amenities. And you put in like hundreds of hours into building the most beautiful experience for your guests. And you spend the money on, the time mostly to run it well. And go in there and you kiss their babies, so to speak. The best Airbnb operators get in there and they're checking their guests in themselves. They're there on the property. If you're doing that, you're putting all that effort in there, you could juice out a higher return, keep your expenses super, super low. Maybe with a partner, you guys could each bring in 30, 20,000 a month, I would say. Yeah, you could do that. And then there's the lift on top of that. If you've done that to a property, that building's valuable. Once you have 2 years of financials, you go sell that building, you take your 500,000, it's now worth $1.5 million. So you've tripled your money over a 2-3 year period, and you've generated $20,000 a month. So one good deal is all it takes. So getting out there, and you'll have to look at 100 deals to find one that makes sense, right? You look at 100, you'll verbally offer on, or at least offer on 10, and then you'll close on one, right? So you got to pound the pavement, and then once you have it, it's a job. But you can for sure that's a scenario right there I just laid out where you could take $500,000 with a partner and you got to work on marketing that deal, show how great it is, bring it to some investors at meetup groups, social media, whatever. Find someone who also wants that, which is easy because there's so much money out there and there's not a lot of deals. So if you can find a good deal that's way below market value or has some special value add, like interest rates are at 8 or 9%. So you get a vendor to finance you at a lower rate, that can make a lot of sense, right? That's where like you can get in there. Maybe an owner is tired. Someone's got lots of money, doesn't care about trying to, they don't want to meet guests. They don't want to check people in. They don't want to make a great experience because that's not the life that they want. That person isn't utilizing the asset as well as it could be utilized. You come in there and you transform that asset. You put some money into the property, you renovate it, maybe you refinance it after, pull your capital back out, and you got a great asset that you've pivoted and made it more efficient by putting in the time. So with time, you could for sure grow that capital, but it's business. And hospitality businesses are not for everyone. Flipping real estate businesses are not for everyone. Acquiring assets like that, you got to get out of your comfort zone and make a lot of calls and dials and lunches and go out and see a lot of properties. And you won't know in the beginning what you're looking at and how to, even if you're looking at a turd or looking at a piece of gold, how do you tell, right? So a lot of that is coming down to how do you run your numbers? How do you, forecast all of this thing? Like, how do you know what the nightly rates are going to be? I have to get out there and look at every single Airbnb listing and look at the AirDNA data on the websites and find out what are the booking rates look like? What's the vacancy rate? What's the occupancy rate in this area? And what is the average nightly? What about high season? What about low season? All of those things and make comparable analysis. That's all part of it. But yes, is it possible? For sure. The reason I like real estate over another business is because in another business, let's say you screw up and you suck at hospitality, people hate you and you're like a hostile person and you're not fit for running Airbnb and you have to outsource everything and it goes horribly. And the person you hired isn't great either and it just goes to shit. You've still got a building that if you're smart when you bought it, is worth more than what you bought it for. So your underlying asset, your $500,000 is safe. You put $500,000 into, you have a gym business and you put $500,000 into equipment on the business and furniture on, you say you have an Airbnb too and you run furniture on your Airbnb, your furniture's worthless after a year or two. If it doesn't go well, landlord, you piss off the landlord, piss off the neighbors or something. I've had that happen. I know people who have done the re-rental strategy and pissed off neighbors, had bad Airbnb guests because they didn't know how to screen for them, and they got their lease terminated. Their furniture's out on the curb and it's worthless. They got $50,000 into setting up an Airbnb. That's a reality. That happens to people. That you gotta be prepared for that shit. So with your $500,000, you could do a business and you could do a gym launch or something, right? Like I don't want to. That's a bad example, but like whatever. You could pick some sort of business and put $500,000 into it, and you could invest in marketing, and it could go poorly. The marketing strategy doesn't go well, and you lose everything. Your underlying asset is nothing. So I like real estate, and that's why I got into real estate as a business, because of the safety, because of the risk to reward. And I think that real estate outperforms because of that. It's a very safe place to grow your capital. Your downside, it's possible you could lose money in real estate, no doubt, but you have less downside if you do it properly than a business, where if you don't do it properly, the business, you could lose everything, and even more than everything. I know people who owe vendors money, and so they're getting sued, and it's like they go bankrupt, and then they're sued personally. They lose everything. So it's just, at least with a real estate property, you have insurance, right? So like you're relatively safe. I guess you can get business insurance too, but anyway, it's tough to grow capital like that. And if it was easy, everyone would do it. But is it possible? For sure, Alex. Aiden says, evening, Mike. Hey, Aiden, how you doing? Jonathan says, Merry Christmas. Hope you guys are well. I am, thank you. Mason says, look forward to these streams every week. Thanks, appreciate it. And I look forward to giving to you guys and, as much as I possibly can, trying to add value to your lives. And here we are every week. Free coaching. David says, Mr. Rosehart, what did you think of Canada's inflation numbers? So Canada came out, I think it was 6.8% inflation today. The challenge is this. Core inflation is sticky. So groceries are up over the last 12 months, every month at a faster rate than inflation. Rents are going crazy right now. And the majority of households spend 2/3 of their budget on rent and housing. So 2/3 of how Canadians, and their car payment is the top three things most people spend money on. And consumer, like spending, eating out, which is also up. The categories that people spend like almost 2/3 of their entire budget on are up faster than inflation. But oh wait, TVs are cheaper per inch of TV, and like per spec of RAM power in a computer is cheaper, and your cell phone per CPU computing power, however you measure that, I guess every gig of RAM or whatever, however they measure the performance, you're getting more performance because technology advances obviously for less money. So those things like that are dragging inflation. down, I guess. But yeah, we have a serious problem. The problem is that it's sticky. Again, we've seen it's sticky. And so I'm curious to see the next report, because we need to really, it's not about one report. It's about a series of monthly inflation reports where we can look at the data at upon a trend and see, is it trending down? How is each category trending down? That's what's concerning, right? Is like, the good news is it's trending down, but we've hiked rates faster than we've ever hiked rates before in history. Over the last 9 months, we hiked faster than we've ever hiked in history. Worse than the 80s, worse than the 70s. The fear is that they either break the market by hiking this hard, because people are feeling a lot of pain right now. Either they break the market and then they have to pivot. If they break the market and people start to crack, and because people are this close to losing their house, this close to not being able to pay their credit card bills, their emergency funds going down. They had a lot of excess savings in 2020, 2021 with the whole pandemic. People were getting stimulus relief. Those savings are getting eaten up. And soon, the Fed is going to have to pivot, because they're going to crush businesses, people are going to get laid off, and the lagging effects of all of the wealth destruction that's happened this year, myself included. Like, my crypto portfolios, it's in the shitter, right? Like, I had HNT tokens at $50 a token that are worth like $1. You know what I mean? That's a 50 to 1 the wrong way. So there's a lot of crypto stuff. Even Bitcoin's down 80%. You got your PayPal, your Meta, your Amazon's 50%. Your Meta, Facebook's down 60, 70% on the year from the highs. That's, there was some serious institutional real wealth trapped. 60%, you wipe out 60% of someone's portfolio. Imagine they had, Amazon, PayPal, Meta, Intel, Nvidia, Disney. Imagine they had all those great big companies in their portfolio. All the consumer stuff like Nike and, Target and Walmart and all that stuff. They've all been crushed. And so most people have lost a lot of money. And so travel's gonna be a shitter. Airbnb's gonna be worse. The rich will still be okay. They'll still travel probably. There will be still, a fair amount of travel, pent up stuff from the pandemic that will still happen. So it's not gonna die. But I don't want to be so dramatic to say like Airbnb is dead. But there will be lower demand. And so the top operators will stand out. The better properties will stand out. You have to be smart. You have to lower your price in your calendar to get it booked. And so it'll be a little bit of a tough time. But those people who survive through this and build a good base through this are going to be laughing coming out of this recession as we boom, as rates eventually do come down, which I think they will. I guess there's a possibility that the Fed stays hawkish and they keep giving us rate hikes into January. Another 25 basis points in Canada is coming. They might do another 25, 25, and 25 or 50 in the US, and Canada will follow suit. So we might see another 1% hike from here. And if that happens, there's more pain. And so there's a higher probability of recessions, at least an earnings recession into Q1, Q2. It's a real risk right now. I'm almost sitting in cash. I'm ready to close out my positions because I'm so uncertain right now. I'm waiting for a little bit of a jump to get out of some of my positions right now, but it's just, I'm not sure when to buy in, because what if the Fed can't get inflation under control? What if it is sticky into next year? And then how do you reverse all this inflation we've had for the last year and a half? Almost 2 years now, where things have got crazy. You need deflation now. Deflation crushes an economy. It's the worst thing to live through. They're going to need, if this persists, we will need deflation to fix the problem, I think. So there's a real risk here that, I guess there's several possibilities. 1, the economy goes into recession. 2, we go into deflation, leads to recession. 3, inflation persists and is sticky and it lasts for years because they're afraid to break the economy and they can't get under control. So if it's sticky and they tread the line where they kind of go hawkish, dovish, hawkish, dovish, hawkish, dovish, we could get 2, 3, 4 years of this, in which case that would be very painful because it's just a long, drawn-out pain. I'd much rather them rip the Band-Aid off, go into a recession, and we V-shape recovery, as opposed to like flat. Like we all want the market to roar again, right? And the way for them to do that is to break the economy. They have to break it, break everyone, and then we'll get the recovery. And they'll drop rates and things will be good. So we hope for that scenario. No one knows. There's no consensus. I think that the bond market and the bond yields right now on the inverted yield curve speaks to investor sentiment and Wall Street's and Bay Street's confidence in the Fed and the Bank of Canada. They don't, and by the way, the Bank of Canada is running at a huge loss right now. They're losing money hand over fist. They can't keep rates this high. The government can't even sustain the interest payments on its own debt. That's what's going on right now. It's real pain. Of course, they'll just tax everyone to pay it, or they'll just write it off and bring it back in later and be like, oh, this loss didn't happen. Let's just put it over here. They just put new provisions in that allow them to do that. Then Canada can actually just sort of set aside the losses and bring them back in years where they're in a surplus. And it's like, we just pretend the debt doesn't, that you're not operating at a loss, a huge deficit. Anyway, yeah, so my I guess suffice it to say, we're in a rock and a hard place, and it's curious to see how this plane flying down, which is the Fed, flying into these territories, whether they hit the rock or the hard place, or they fly right in between, or maybe they decide to fly back up and come back around again. We have inflation for another year. I don't know. It's like Groundhog Day. Is he gonna see a shadow or not? Every time it's like, I swear, every time the Fed speaks, before they speak, it's like the markets are rallying. The VIX, the volatility index, is just spiking. I can't handle it. My heart's like, I can't trade anymore, just because it's not a good use of my time. I'm better off to go find some deals and assign them, or go take down some flips or something, because I can make more money with my time and a lot less stress. So that's where I'm at with this whole recession. I think that for those people who are just working and saving, continue to buy in, continue to dollar cost average. We don't know when the Fed is going to pivot. It might be a year from now. It might be 6 months from now. But what we do know is that short term, we are in for quite a bit of volatility and potentially some more downside. But it could flip on a dime. We could have a bear market rally. The Fed goes dovish, and we have a good report, and things go rally 20% up. That can happen. So be prepared, guys. If you're shorting right now, don't. Be careful. Don't short and be careful. So that's kind of where I'm at with that. I'll do some more Q&A real quick and rip through this stuff. What are my thoughts on Sarnia as an investor market? Rent versus price, looks decent, pros and cons. Well, I grew up in Sarnia, so I'm partial to Sarnia because I went to high school in Sarnia. What I will say is Sarnia is a shithole. Just economically speaking, they are driven entirely by the armpit of Canada, which is just outside of Sarnia. All along the river there, they have the Chemical Valley, which is like Suncor, Dow, all of those producers of basically oil, right? Refineries. And it's a dirty place environmentally. There's a lot of drugs in Sarnia. It's a rough city. But I own a property in Sarnia right now. My brother and I have a duplex in Sarnia, and it cash flows well. So I invest in the market. I've done 4 flips in the last year and a bit in Sarnia. So I'm investing in Sarnia because the cap rates are strong. Mostly I'm investing there because my brother lives there right now. And it gives me a competitive advantage in that market. So that's why I invest there. If a good deal falls in my lap, I'd buy it. Would I buy something off MLS? No. No. There's just not. You could, yeah, for sure you could. It's not horrible. It's just the buy and hold doesn't attract me in the same way. It doesn't tickle my fancy anymore. There's a lot of risk and stress for not as much upside. So is Sarnia a decent market? Sure. It's a blue collar town. It's got a nice college, beautiful beaches, some of the nicest waters. If you go, towards Brights Grove and towards Grand Bend, some of the most beautiful beaches in the world. The most beautiful freshwater beaches on Lake Huron in the world. Some beautiful boating, beautiful fishing, just an amazing, massive, beautiful lake, clean water. If you go, the thing is, all the pollution happens down the St. Clair River, and it flows from Lake Huron down into Lake Erie. So all the water in Toronto is poisoned from Sarnia on the way down. But, because Lake Huron's the first Great Lake, and so it's the cleanest. So on the other side of Sarnia, it's just beautiful. That's my story for you. My cottage is 40 minutes from Sarnia, Grand Bend area, and I love it. There's nowhere else I'd rather spend my summers. But Sarnia itself, it's all right. There's some pros and cons for you. There are other markets that I think are better, but some people are having great success in Sarnia, and I've had some success in Sarnia. Tristan says, I'm looking for my first property to house hack. Don't know if I should fix it or not right now. Well, if you can find something in this market that's turnkey, that works perfectly, where you can just walk into it and it's, you can house hack at day one, maybe do a couple small things like put a door in or something. Imagine there's a nanny suite, you put a door to the basement on, boom, $200, you get a door with a deadbolt, and now it's a separate unit because you got a fireproof, soundproof door. Boom. Now, like, that's a super easy option to take a nanny suite and cash flow while you live there. Who cares if it's 100% legal because you're just living there, rent out another unit in the basement, or you live in the basement, rent out upstairs, make even more cash flow. That's what you want. The big fixer projects right now aren't selling at enough of a discount, in my opinion. Now, there are certain opportunities where the big fixers do sell at discounts, so there's exceptions to every rule. But I found if you're getting your first deal, find something that just needs a little bit of cosmetic. Find something that, you know, you can walk in and start cash flowing within 30 days. That's, I think, a much better play where you can do some cosmetic stuff and live in it for free. I think rent hacking and house hacking are like the cornerstone of living a frugal life. You could live in a mansion, and if you had a guest house and, you know, maybe a huge basement, you can rent it out and live for free. That's amazing. Why would you want to have your own little apartment when you can live in a mansion and house hack? So I don't know. I love house hacking. I love rent hacking too. If you can't afford to buy a house, you can rent hack. You rent a house and do the exact same thing with it. You rent out pieces of it, and it covers the cost of the whole rent in many cases. Joseph says, happy holidays, Mike. Hope all is well. Wanted to ask, I'm currently debating between investing in real estate where I am now with the low cap rate, high cost of living state, COL, cost of living, where I know the market from back of my head and have connections but need large upfront capital versus going to another state with low capital and lower upfront, but no idea of the market or have any connections there. What are you typically advising? Where do you invest, or where do the numbers make sense? That was a long question, a three-part question. So Joseph, I guess it depends. I think investing in a market with higher cap rates in this environment will lead to more fruit. So I think going out of state and building those systems and building those relationships will provide you more fruit than investing in a market with, you know, low cap rate. I just, like, imagine LA or Toronto or Vancouver, and it's like you've got to have deep pockets to make a splash there. And even then, like, the ROI just isn't great. It's hard to get a really good deal in those markets because there's so much capital competition, and they drive the cap rates down. And just, you know, interest rates are the same whether you're investing in Toronto or, you know, middle of nowhere. Middle of nowhere is going to have a 15 cap rate, you know, and Toronto's going to have a 3 cap rate. And so there's a 5x return. And when you're borrowing at a cost of debt of 8% right now, let's say, or 7%, or maybe the best case scenario, 6 and a bit, you're looking at a negative spread on every dollar you borrow. And so that means that it doesn't make sense to borrow. And in a market where you can't borrow, I don't even want to touch real estate. Real estate's sexy because you can leverage it up. The leverage makes it attractive, but only if there's a positive delta spread between cost of debt and return on asset. And the return on asset, I guess, proxy in real estate is the cap rate. So hope that made sense to you. So I would go and develop those connections in another market. That's just me. But I can see the allure of, like, maybe you go to the greater area and just outside of your city, there's like a suburb where it can make sense, where you're still close, you can still leverage your connections and still do a deal. So maybe there's a compromise. Maybe there's something close by that can cash flow, you know, that makes sense, not right in the core, but like slightly outside. And you can still leverage all of your plays and potentially put something together using the connections you have and the capital that you have. KH says they just arrested Sam Bankman-Fried. Yeah, I heard that as well. US and Canada. Boom, boom, boom. Any reason the Bahamas can make up any kind of excuse to arrest you? Well, in this case, he literally was a Ponzi scheme, embezzling funds, and clear cut, Sam from FTX was taking capital for his personal hedge fund, Almeida, and embezzling funds. So he was 100% guilty, if of nothing else, pure incompetence. There's got to be some malice there. Like, it's hard to be like, I didn't notice $3 billion went missing from the accounts. It's like, no. Like, that's too large of an amount to just claim ignorance. So there's definitely some ignorance here. But he took $1 billion of that capital and donated it to Democrat campaigns. So he was the second largest contributor to Biden in the last election. He was the second largest contributor to the World Economic Forum and the Great Reset people, that whole council. Like, he was paying the right people. So he might be okay. when you grease the right pawn, when you embezzle funds in a Ponzi scheme and you loop in the right people and pay the right people, I mean, it might be sustainable for him. Not to the extent that he'll never have the same success that he did. I think no one will trust him again. But he might still have a go of it. Wolf of Wall Street. Jordan Belfort, I think it was. He came back, right? So anything can happen. I mean, I'm excited to see the movie when it comes out. I know that they're already working on a book and a movie for it, so I'll be excited to watch that. I've been watching the story from the sidelines. Bahamas, the reason they chose the Bahamas is because they have some very preferential treatment, and they were writing some of the best laws around cryptocurrency, taxation and regulation, or lack thereof, that kind of worked well for them. So there's a number of reasons why he went to the Bahamas. He was in the main capital. I would be more like the Grand Bahamas Island as opposed to like Nassau. I would choose Freeport. It's just me. But yeah, I mean, don't do illegal shit. Bahamas prison system isn't great. So yeah, I wouldn't want to. I don't think I'd want to live in the Bahamas full time. I think I'm cool, setting up my primary residence there and traveling around the world. Like if you're someone who travels a lot and you enjoy exploring all the world has to offer, you should set your home base up somewhere that's tax preferred. If you're going to travel the world and be a digital nomad, I mean, don't set your primary residence up in US or Canada. Like if you're going to be gone most of the time anyway, why pay so much tax to them? Just, I don't know. Doesn't make sense to me. Good evening. Congrats to Argentina. That's right, Will. Congrats to Argentina. I was secretly rooting for Argentina as well. A little bit of emotional relief for them with the inflation situation. Yeah, I mean, one of the best things you can do when people are suffering is rally behind entertainment and create a circus of sorts. So it's Argentina has insane inflation, well over 50% inflation there. You go to the grocery store one day. I have a friend who has family there, and we were talking. He says his uncle goes there, and one day, he goes in and had a list like $5. The next day it's $10. Like that's how bad it is there. Like, you literally have no price stability at all to do business. So it's just chaos. They've just given up on their currency basically, and they're trying to use US dollars, right? And even then, there's so much fluctuation and volatility when it's hard to do business when you can't rely on the price the next day. How do you price something? Thoughts on starting a partnership and taking control of a small mid cap versus strictly real estate? Alan, I love the idea of venture capital, and I would love to someday dip my toes into that. I've done it before. We did buy a business and we turned it around, me and two other partners. I bought a company just out of Etobicoke, medical company, and we refinanced it at more than, like within 6 months, we'd refinanced it at more than what we bought it for. We pulled out all of our money. We fully bird a business that we bought. So I can't say much more. I'm under NDA, but buying businesses is a great way to build wealth, but there's a lot of risk, a lot more risk buying a business and buying staff and systems and processes than there is in buying real estate. Just my opinion. So for me, I would look for businesses that are synergetic maybe to real estate. So Chung, should you sell GME and PayPal to write off the income? 100%. If it's not in your tax-free savings account, if it's in your TFSA, you're screwed. Like my crypto holdings. If it's in your TFSA, you get no write-off at all. But if it's in an open account, 100%. Sell it, tax loss harvest, get back in 1 or 2 months. I think it's at least 1 month. I think call it a month and a half. Go back into that asset, and I think it'll be lower when you can get back in with any luck. Port City says 100K CAD or to put to maximize returns. I'm confused. That question didn't make any sense to me. Miguel says Alphabet looks like a good stock right now because the price earnings are so low. Yeah, I mean, Google's a great company. They have a lot of things going on that are bullish for the future. I think they have a huge monopoly over basically they are the internet. Like everything's indexed through Google. And beyond that, they have so many other areas that they're touching right now. It's just, I love Google. I love Meta. I love Amazon, Microsoft, many great names that I think will do very well. Amazon's down 50%. Meta down 65%. So there's a lot of opportunity here. I gotta wrap the stream up though. I gotta go put my daughters to bed. Get the likes up. Thanks, Aiden. I appreciate that. Get the likes up for the algorithm. Appreciate that. That'd be nice. Best first steps in wanting to wade into real estate investing, please. Wade in carefully. do a lot of analysis. Go look at 100 properties before you offer on one. Analyze 100 properties. Walk through what's your top line, what it rent for, what are all your expenses, what will be your net cash flow. Look at different types of properties, duplexes, single families, triplexes, large multi. See a bunch of everything. See a bunch of properties in a bunch of areas before you make a decision. Do your research. That means putting in the steps, put in the reps. Next says, moving to Florida next week, thinking Tampa area, any suggested neighborhoods, also planning on being there for 6 months, buy or rent. Nick, so I personally love West Palm Beach area. I like Port St. Lucie down to Stewart, Jupiter, Hobe Sound is in there. Then you get down into West Palm Beach, all the way down to Pompano. I think that whole area there is poised to grow. Miami can't really grow anywhere but north. So I think that whole area is great. I also love the proximity to the Bahamas, 60 miles away. A number of reasons why I like it. The warmest place in the US consistently is like Miami. So if you want warm temperatures at night all the time, northern Florida, like Tampa's cold sometimes. Like there are days where like it gets to like 5-6 degrees Celsius at night where it's cold. You're in northern or central Florida, it's not the same. So for me, South Florida for sure. For me, Southeast Florida, again, because the proximity to the Bahamas, again, a number of other reasons why I think those markets are, Tampa's growing. It's got a lot of great things going for it. So I would have nothing bad to say about it. It's a beautiful city. Yeah. I gotta go. Is it worth working for 200 grand a year? It's up to you. Take the salary for a while, lever it up, buy some properties with that huge salary, get some mortgages, get some debt under your name, open some lines of credits, then go become an entrepreneur. Take the $20,000 salary and get a $20,000 unsecured line of credit and a couple of properties. Boom, now you have a $20,000 line of credit. As an entrepreneur, you can use that to grow. So I would take the job and go from there. Michael Chung says, what's the roughest part of Miami? There's a whole bunch of shitty parts. Like Little Havana is pretty, Little Haiti, all that whole area, it's just rough in there. There's a lot of rough areas in Miami. Honestly, I wouldn't want to live in Miami. The traffic is horrible. Yeah, I got to go like 45 minutes north, up to like West Palm Beach or like Jupiter. Pompano wasn't too bad, but you got to get out of Miami. Miami was brutal. If you're going to be in Miami, go South Miami, like almost as far as like Brickell, keep going down south to like Homestead even, maybe down to the Keys. The Keys are I wouldn't live in the Keys, but anyway, I got to go. I got to wrap the stream up. I've been on for a little too long. Thank you everyone for watching. Look forward to connecting with you guys into the new year. I'm excited to be down in Florida. If you're watching this and you're going to be down in Florida, shoot me a message on Instagram at Mike Rosehart, on Facebook, Mike Rosehart. Look for the little blue check mark. Don't add any imposters. I will never ask you to invest in crypto or some scheme or whatever. Obviously, if you see an account that doesn't have, posts going back for years and years, you can see the dates of the posts, then it's a fake account. So find the real account and then message me and let's connect. I do stories every day. I share tons on both Facebook and Instagram on my daily stories. And I'm looking forward to connect with everyone. And if you want to link up or there's some way we can do business together, always open to opportunities. So shoot me a message. All right, everyone. We'll see you next week. And looking forward to all your questions next week. Secret to unlocking a wealthier you. 3 levers. Control your financial future. Spend less, earn more, and maximize returns in the difference. Bye, everyone.